Good afternoon, everyone. What do I have before us? The S&P 500. What type of chart? It's an MMT chart. It's our platform. It's a market maker platform, and it's a 60-minute time frame of the S&P. So when we take a look at directional price volatility, we love the 60-minute charts because when we had the headline events over here, and what day, this was when we made the highs up here on 4/2 of calendar 2013. Today's date is 4/9/2013. That's 7 days ago. Remember, weekends don't count. We only use weekends for doing research. Nonetheless, each one of these lines on the S&P were $3.61 on a 60-minute chart, which equals 1/4 delta in our market maker platform. One of the things that I would like to highlight is that the price volatility from headlines, there was a pullback, and a lot of this was to do when we were up here with those job numbers last week. Let's go back and revisit. That was on 4/5 of 2013. We started with a gap down here on this 60-minute bar. We put the bottom in it, and we've come back here mathematically, and you can see the ascending diamonds going in that direction. They're holding the half bars. Each one of the lines are mathematically priced for everyone, so you don't have to sit there and figure it out. It does it for us. But nonetheless, each line was 3.61, $3.61, 1/4 delta movement. So the S&P came roaring back to challenge these highs, and it's called a double top 60-minute resistance right up where the problem with the jobs report was, and the pullback that we experienced, and the gap down to the bottoms, and they came right back and bought it. This has been a pattern all of calendar 2013. So what it says to me is that when this particular dip happened, and this particular bull cycle, meaning that the bull needs a pullback. Yes, the bull gets overbought, but every time that the downside volatility comes into play, it automatically takes out, it turns, it goes up. That's why in 60 minutes you can clearly see what the broader S&P 500 is doing on that intraday in the 60-minute market maker time level mathematical algorithmic sequences, both to the downside and to the upside. And that is a good description of price volatility. And it's a good description of how that bull has been buying every dip. So people start to chase markets at highs. How do you confirm this? Is that we've seen many of these over the years, and you start to see where that late day sell was. You sold down in the S&P right up here when you got back up here to these highs. Yes, it was a 60-minute reversal, but it took up the previous 60-minute bar. See, right here, this half bar was 1572.24. 1572.24 in the S&P. And what happened in the S&P is the minute we hit that, we broke below that half bar. But look at the that was a $3.30 bar, 60-minute bar reversal here, and this one bar. And it was almost a 1/4 delta, which equals $3.61. And that bar during that time frame was $3.30. It was 31 cents short of a complete 1/4 delta reversal, mathematical, at 3.61, but it came out at 3.30. And when you look for reversals, you always look when the highs get challenged, but you need to have one of these 1/4 deltas. That's where people started getting off the boat, meaning that some people that had some leadership S&P 500 stocks were probably taking some profits up here. But we are at the all-time highs again where the event started. My thought to you is the following. If you want to learn how to trade price volatility, we can address that, and we're willing to do that right away with you. All you simply have to do is remember that stockmarketfunding.com right here is we have all the live trades that are done intraday and the analysis and after hour earnings and headlines, events, just about anything that goes along with markets. And of course, here's our platform. And one of the things that I really want to emphasize is the value that you get is when you open an account, you can see that you're going to get money that is going to be deposited in your account as long as that account is being held. And all your information, just click on Open New Account tab. There you'll find everything you need to know, and you'll have a lot of questions. Listen, the reality is you have programs that can go with this. You don't need any experience. I promise you that. Why do I say that? It's very simple. The limit orders and sell orders, limit to buy orders and sell orders will be given to you directly from the MMT Market Maker division. If you start with the $2,500 account, you'll get $15,000 intraday. That means that $5,000 deposit, you're going to have $50,000 intraday, which is very nice. That's 10-to-1 buying power. That other $45,000 does not belong to you. You need money to make money. You need money to make money, and you need the training with the money. That's what we're here to do. So, our ability to help you is optional to you. If you want it, you're welcome to go ahead and get into that program. You will not suffer from the pattern day trading rule any longer. Accounts with $25,000 below it, you can go ahead and watch the video. It'll tell you everything you need to know and everything that people have to suffer with. Okay? But that, you can say goodbye to that today. So, back to the S&P 500, we definitely have a double top on our 60-minute, mathematically straight down, but mathematically right back up, same direction. The intraday high, let's go to today's intraday high, was 1572.35. Okay, this is the intraday high. I'm sorry, it's 1573.89 on this 60-minute bar. Let's make sure 115.73.89 multi-year high in the S&P with directional price volatility. Short, you make money this way. Long, you make money this way. The lesson is that price volatility works to the downside, and we started seeing the same amount of volatility to the upside to challenge the very highs again. That's how price volatility works. Once again, get started today.